OPEC cut barrels of oil substantially out of nowhere, driving the S&P up as energy names reclaimed their seat. And then we just saw the profit taking early in the day. We have a lot of sectors that are moving. We're getting a lot of indicators that are really glaring, and we're going to go over those today. We're going to talk about what sectors are moving, which sectors are poised to outperform, what happened in the last 2 hours that drove the market higher, and what are the two letters that are on everybody's mind. Let's get to it. OPEC is limiting the supply of energy through oil, and that usually will cause inflation to stay around longer than anticipated. And this was an absolute coordinated effort with several other countries. It was pretty clear that Russia was obviously involved. Everyone saw the headline. So the question is now, what happens with oil? What happens with energy names? Well, I don't see a huge move here. And we're going to look at this on a weekly. I don't see a lot that happened here. I see a huge gap up, which nobody could participate in unless they were in the know on what they were going to do over the weekend. Mind you, they had a meeting today. It was supposed to be at 6 a.m. But now what are they doing? Now you're just sitting there. So I don't see a real reason to think that this is going to continue to follow through. Frankly, I think that they did what they did because they know that the Fed eventually is going to cut rates. It's just my opinion. And they're trying to get ahead of it by controlling the narrative through oil. So that's a huge cut. Some people say it's a slap in the face because the current administration said that they are not going to refill the reserves right now. So I think there's a couple different reasons, but it doesn't matter. What we're looking for are the stocks and what to do with them. And if we just take a look at this, we have a really nice clean line that's just pointing straight down here. And until I get above that little DTL right there, downward trend line, I have very little interest in trying to see if this is a quadruple top or exactly how energy plays out. Now, I just kind of bounced around a little bit. We had that one push rally where we flipped over on the hourly, and then we just didn't do a lot. Let's drill into this a little deeper here. And we looked like we were going to go, but we really didn't. We had the breakout. I thought we might gap fill, but I would not rule this out. The way to usually buy these is to buy them when no one wants to go near them. When everybody thinks that these have had it and that's the end of them and they're never going to come back, that's usually when they cause the most amount of pain to people, as you can see here. Just like the exact opposite. When you think it's going to be disastrous, it never is. And then they end in tears and on both ways. So I think that's something to remember. So I would not rule this out. I'd watch how this doji forms, and then I'd watch this going forward. We should talk about the mixed bag that's going on out there, because you have XLC, and that is clearly breaking out. This is a huge cup. To me, this could be an enormous handle. That handle broke, gapped up, and we should get up to this level. And there's some of the leaders we're about to discuss in a moment here. But what I found interesting about this was the outperformance here versus XLK. In other words, XLK did not hit a new high today. What it did was just kind of stay in line. And this is obviously tech. So we're seeing the inflows go into XLC. Now, I find that interesting because usually when you have some kind of turnaround, you're going to see money go into XLF. I think people are still scared of that. You have a lot of earnings next week on the financials and the week after. But you did start getting above this key level today on XLF, and that is important. What I'm trying to wrap my head around is we have some of these really bigger names rallying, like the XLC, but then at the same time, XLV is breaking out. So that's kind of weird. Usually doesn't work that way. Usually utilities would move the same exact way as the market, and that didn't happen today. Instead, we had, the XLP rallying. So I think you have a tremendous amount of confusion going on out there, where you have one group that is out there saying, okay, we're going to go out there and buy the leaders. We're going to go out there and buy the NVDAs of the world. We're going to go and buy the AIs of the world, which we're about to cover. We're going to go and buy the Netflixes and the Metas and anything like that. And you have another group that's saying this market's going to roll and we need Procter & Gamble, we need Clorox. So this is what makes a market, and this is what I'd like to see. I like to see where what we're expecting is not what's happening. If the market's going to rally, it should be rallying on XLP. So what they must be assuming, they have to be assuming that the bond market is going to sell off, right? And then you look at the bond market today, and here's the 10-year. And you look at the yield and you say, well, we dropped today. And so if you drill into this and go, okay, well, what about going to the 2-year? The 2-year must have sold off. Nope, 2-year was bought all day after the auctions at 11:30 and closed back below the 200-day moving average on the yield side. And again, I look at yield like this. I chart yield. If it plots, I chart it. So if you're looking at this and the way that it moves, so let me get this straight. I've got yields rallying, but inflation's supposed to go up, but yields are dropping, so bonds are rallying rather. So then you would drill into this and go, okay, well, how much further could we get into this? Let's just keep unraveling the onion and go, okay, well, here is high yield, and let's just bring this back down here for a moment. And we look at that and go, well, high yield did not move, but it did not fall apart. So in other words, we don't see the panic on the corporate bond side right now. I think this is very important. You know, we've gone over that one graph ad nauseum for those that have been following me, where we're showing the spread between the graphs. And there's so much information to go over today and so many stock ideas that we're going to be really focused on that for this video. But keep in mind, you're not breaking down there. So then you start playing it out. Okay, we didn't break on the 10-year. They bought the heck out of the 10-year, but then they're not buying utilities. This just shows to me a complete disassociation. And a lot of people just do not know what's going on. Now, one of the key graphs I went over on Saturday, and I'm going to link Saturday's video at the end of this, and I'll also drop it in the description. But one of the key things to take away from this is the S&P, and this is stocks above the 5-day moving average. You're at a 96. This is one of the highest levels that we've been at ever. This has to work its way off. Every stock that's in the S&P is not going to be above its 5-day moving average. It's just silly. It's not going to work that way. So you have these levels and you're going to have to watch those levels. And usually what this means, we'll revert back to 50 and then go from there. And that 50 is a pretty big deal. So here you are on stocks above the 200-day moving average. And you can see every single time you get above 50, what happens? We continue to move. Now, in front of us are S&P stocks above the 200-day moving average. This is really helpful just to get an understanding. And think about this rationally. If more than half the stocks are above their 200-day moving average, then you're in a good spot, right? I mean, that just kind of makes sense. This is your demarcation line of 50. And that would just mean that the average stock is above its 200-day moving average. Therefore, it's being accumulated. Makes sense, right? So here we are in these lines, and you can just see these little red circles we have right here. And excuse my caveman-like drawings, but this is what we get. So right in here, we're just holding, right? And then all of a sudden, we pop over that 50% line. And what happens? That puts in the low. Happens again here in November. Now, if you take a look at the chart and go, well, we just popped over here. So they're basically telling you that if you believe what I'm showing here, they're telling you that you're setting up to push. Okay, you're setting up to push here. And if you were to look at this chart, you should be able to see that you have the potential to push. If you look at the S&P here, it's pretty clear that we're not taking out lower lows. We're making higher highs. People can be as bearish as they want. I've watched us go through several cycles of this in my lifetime. And the one thing that is always true is you always wonder how you get these perma bears, these people that just, they never see the light of day, right? And it becomes because they got hurt during a bull market and they just stay that way. Now, if you go take a look at Bank America and you look at the bull bear measurement on whether or not we have fear, whether or not people want to buy, I'll pop it in real quick so we can see it. So here it is. This is BofA Bull Bear Index. And when you get to a 2, that's an extremely bearish reading. Now, what's interesting about last week with all the noise and then the rally and everything, it still came in at a 2.3. It dropped even though the market is going higher. So that shows you how confusing this is. And that's what's really happening to people right now. And I think that's important. I think that's why we're seeing this huge disconnect between watching healthcare trade up and why we're seeing some people go out there and buy the staples. And these are sectors that you buy because they are, quote, defensive. And just to be clear, not a lot of investment firms are telling their clientele to buy defensive names right now. They're telling them the exact opposite, quite frankly. They're telling them to focus on the companies that have like a higher growth margin, XLC, XLK, things like that. So kind of interesting, but I like these names, and there are just literally a ton of names that are moving. Anything with AI, anything, people are all over right now, and we're seeing that more and more. It doesn't matter what the news is. It's completely irrelevant. It's just find the ones with the small floats, and that's what's working. This was something we bought in the Alpha Chasers community today. We paid around nine and change for it, and we had a pretty good day with it. And there were a couple other entries later in the day in which we added. You're down after hours. you never know how these ends. And I usually don't play these speculative names, but this one was just so glaringly obvious today that it made sense to give it a try, and it worked out exceptionally well for us. I don't really like the smaller cap ones that much. I'd rather play with the big dogs. But if you look at something like this, it was just became increasingly obvious when you saw the absolute relative volume during the day. Pre-market, it was just through the roof. So can we get through this 23.50? I have no idea. It could just as easily as get through there as they issue a secondary, as easily as get back to 35 and work its way up. I really have no idea what's next for it. What I would say to you is what you'd like to see is some consolidation and then a break off of that so you have something to work with. But you could have news come out at any time that could drop these kinds of names. Same thing here with AI, and you can just see the break of the DTL downward trend line, and then we just start flipping higher highs on the same bar. Whenever you do that on the same bar, it's pretty vicious, and you can just see the volume. Even today, huge volume. If you come across and just look at that volume, I think we're at the top 5, top 6 volume the stock's ever had, right? Kind of hard to beat. Kind of hard to beat that kind of volume. Now, you don't have much. Let's clean this up so that we can say it. And this is what I mean. You're going to start seeing way more charts than we were looking at before, because it's just getting to that point where there are so many ideas out there, and the market it's very clear which way the market's going. To me, it's very clear at this point. But if you take a look at the AI and you look at this doji, I mean, that's absolutely glaring. I mean, you can build an entire trade around that one bar right there. So I like this. I like this a lot. And I do think it's going to continue. I think you have to pay attention to the names today. If you get one tip out of this video, take this. Pay attention to the names today that actually hit higher highs when the NASDAQ did not. That tells you where they're putting their money. It's very obvious. So names like AI were hanging in there. Again, apparently AI can't work without NVIDIA. So here we go again with NVIDIA. And all we keep hearing is people waiting for that pullback and that pullback. And guess what? You hit another higher high today. So I don't see how names like this are not going to wind up just continuing to at least not only retest these, but just get back to these highs. And, if someone told you between December, the end of December and March that NVIDIA was going to be at a 52-week high, you would have told them they were crazy. But here you are. And that's why it always pays to do your own homework and not just listen to people, but just, learn from them, but, come up with your own opinions. I don't see how you're getting not to 290. I mean, the 200 days curling up. The idea that you're ever going to see this 100 again, maybe something will happen. Maybe. It would have to be catastrophic at this point. But other than that, people have to start wrapping around their heads around the fact that they missed the bottom of the market and they can either participate or not. Some people just will get it and get over it, and other people will just dig their heels in. It's pretty obvious. So what do you do about it? You wait for pullbacks. So this is where you're at. You're not in a breakaway, runaway bull market. Far from it. You're in a great trading market. Now, if you look at something like this, Tesla or NVIDIA or Meta or any of them, right? And we'll go through a couple more. They are responding to just very simple levels. And here's your support, becomes resistance, support, flips, and that's it. Now you look at the end of the day here and what happened. We just ripped from 2 o'clock on. You don't have one 15-minute bar that was down, not one lower low. From 2 o'clock on, actually from this little doji right here at 1 o'clock, you have red bars, but you don't even have a lower low the entire rest of the day. It's just constant buying. Well, who buys on a 45-degree angle? Who's that rational? Well, it's certainly not retail, because the last thing retail is known for is being rational. So that is obviously institutional sponsorship there coming in at the end of the day. And you can see how we just held that level, did a little bit of the undercut, a little bit of the shake and bake, and then went from there. I would not sleep on that. Meta, I'm fully expecting Meta to change their name any day now to AI, and then we'll go from there, and then everyone will love the name just like they loved Meta. But seriously, it's something we bought in the trading community a couple times last week, and then we just added a swing trade early on Friday, I think, is when we're in from here. And this just looks like it's going to be an absolute monster. I haven't even started with the volume kicking in yet. But what you're doing every day now, every single day, and there's another name that's doing this as well, we're going to go over, every single day you're moving up and you're making a higher high. It's just constant. Whether you want to believe it or don't want to believe it, it's completely irrelevant. It's happening. So 223 looks pretty realistic, and then I think we can get to that 236 level. I think that they can absolutely move, and they're names that I would pay attention to. They were names we traded today, and here's Netflix, traded this one today as well. And we did really well with this. And I think that this is something, let's clean this off. I think this is something that, you're seeing a lot of. You're seeing the pullbacks, you buy the pullbacks, and then they rally. They're not all going to rally, but I would suggest that these are names that you take a look at, some of these larger cap names. Now, as far as ideas that I would just let them set up, I would let Tesla set up. I would not be in a huge hurry here. I tried to trade early in the day, very, very early in the day, and it just did not work. I don't think we should have fallen down on these numbers. Now, people will comment below and tell me why these numbers were horrible. I don't see it, but you're sitting right on that DTL. You didn't break it. Maybe it can redeem itself in here and build over the next couple days, but that's not a bar that usually just flips and pushes higher. So keep that in mind. I would let that play out a little bit, but you're starting to see people chase a little bit, and I like that. Now, not crazy chase, but it's not getting overly frothy, but people chasing these names like AMST. They came out and said the words AI in a press release, and that added about 100% to its market cap. So that's what you want to see. You want to see people wanting to put money to work, wanting people to take risk is a better way to say it. And that's exactly what we're seeing there. So I would tell you to watch these AI names. I don't think this is done, and I think it's going to continue. For me, the most troubling thing out there in the market that we can talk about is we're just sitting there and just acting like it's no big deal that these names are, like these bank names are trading at 95% of their current value. And that is becoming troubling when you see names like FRC just sitting there, or you see names like, let's take a look at this PACW, right? And you're just sitting there. Well, if everything's so great or things are going to head back to normal, why aren't we trading up? And that is the one red flag that's still out there that we all have to watch. Now, in 2 weeks, we go into earnings. And this was something I played earlier because I thought we'd have a nice bounce up over, and then we started with the games. But this pays 7.75%. They've never missed the payment yet. And you're trading at, roughly about a 15.5%, 16% dividend. So it's kind of crazy where these things are trading at right now. If it's trading as if it's going to default. So something's still off here, and I'm trying to put the pieces together, trying to wrap my head around it. So financials are your one sector where something else could happen or a shoe drop, but you are seeing the deposits stabilize. So this is kind of interesting that this is going on at the same time. I would like to see XLY participate, but it did not participate today. So we're going to have to wait and see for there. For now, I would still tell you to look at the larger cap names, AI names, and names also that are having news that you're seeing a driving force with. Any type of special situation right now that has the potential to have risk and reward is seeing movement. And that's a very healthy sign for the market. So VKTX is something we're playing in the trading community, and you can see the move there with it. And you can see how you're hitting a higher high right now already. And this is where you're heading. In my opinion, you're probably going to trade up to that level over a period of time. So I would look at names like this. Another name that we bought today and did quite well with is WWE. I don't think a lot of people really understood this merger, that it's not really a merger of equals. And WWE is really the one being acquired by UFC, and they will get the stake. And it's actually being acquired at a premium to this close. So I think that this was really misunderstood. And if you take a look at WWE versus how the way that the other underlying stock traded, this should have done a little bit better. I currently have a position in this, and I do like it. So that's it. A lot more of ideas tonight. Please comment on it. I do want to go over more of the larger picture stuff, but there are a lot of ideas out there right now, and there's a tremendous amount of volatility, so it gives us opportunity